This is Autoline After Hours with John McElroy and Gary Vasilash, episode 531 for October 29th of 2020. Car sales look strong, but COVID could kick the legs out of any recovery. Watch Autoline After Hours live at Autoline.tv every Thursday at 3 p.m. Eastern Time. That's 12 p.m. Pacific. You can subscribe to this podcast for free by searching for Autoline in iTunes, Stitcher, or YouTube.
Autoline After Hours is brought to you by Bridgestone Tires, your journey, our passion, and by Borg Warner, propulsion solutions that support a clean, energy-efficient world.
Hey, Gary.
John, good to see you.
Yeah, good to be here.
So these days are getting shorter and shorter, but we ought to remind everyone to set their clocks back 1 hour before they go to bed on Saturday because we don't want them to miss next week's show. Just
That's exactly right.
Yeah. If
You always have something important for this day in history. You got one for this?
All right,
week?
I got three.
Oh my God! Geez.
This will be impossible to guess, so I'm just gonna throw it out there. Okay. So in 1908. General Motors bought Buick for $4 million. And I did a calculation to see what it would be, and that would be $113 million in today's dollars.
Still pretty cheap.
I think it was probably a very good deal. In 1956 on this day, Chrysler introduced its 1957 models, including the 300C convertible. Now, the 57 models were the ones with the big tail fins, and there was an interesting story. There was last year a biography of Harley Earl came out, and of course he was the guy who headed up General Motors color and styling for so many years. And it turns out that the GM designers had gone and seen those cars in a parking lot, the Chryslers, and were just completely flabbergasted and had a minor revolt because Harley Earl didn't want to have such ostentation at the time. And so they came up with these designs. So the 57s were a signal design in the industry because, as we know, it would then lead to the Cadillac tail fins.
That's right. Now, question. Do you remember I don't remember, but I know of the advertising tagline that Chrysler used for those tail fin cars?
No, what was it?
Right. I think I got the year right. And the tagline was, "Suddenly, it's 1960."
Wow. And last but not least, since we're talking about Chrysler, in 1962, it began allowing the public to drive the turbine car. You remember that?
I do. I mean, I never saw any turbine cars out on the street. I've seen them subsequently, getting into this career and all that. But I remember seeing them in magazines and the like and just being blown away by them.
Oh, I actually saw one in reality. A neighbor who worked for Chrysler had brought one home. And I mean, it was just like the most amazing thing going. And, those were the days, huh?
Right. Yeah. When the industry had a can-do attitude that anything was possible.
Yeah. And they did it in record time.
That's right. That's right.
So speaking of things like old vehicles, we should bring in our journalistic colleague here, Mike Austin from Hemmings.
Hello from my parents' Northern Michigan outpost. My colleague Dan Stroll has actually written a lot on turbine cars. It went on. All the automakers experimented with it beyond just the Chrysler one in the 60s. I think it went almost up to the 80s, but never anything useful.
Well, they never could get the cost down. One of the first interviews I ever did in my career was with Sam Williams of Williams Research. They make all the cruise missile engines, very small turbine engine cars. And he told me that he expected by 1984, the industry was going to convert over to gas turbine engines because you could burn any fuel. You could even use nail polish or Listerine because they had enough alcohol in them. And that was going to break the back of OPEC and blah, blah, blah. And it, of course, never happened.
Of course, there is that slight problem that when it sucks in the air, it's also sucking in all that debris that we have on our roadways. And, so the reason they work so very well up in the sky is there's not a whole lot of stuff to get in them. Of course, unless they hit a goose or something like that, then it's a nightmare.
Listen, I was on a plane that sucked a couple of geese through the engines, and it sent a shudder through the plane that was like getting hit in the back with a 2x4.
So thus, no turbine cars.
Well, the big problem was actually the turbines had to, and still pretty much have to be made out of pretty expensive metallurgy. And there was a lot of work in the late 70s, early 80s to make them out of ceramic instead. But I don't know what the issues were. They were never able to get the cost down anywhere close to what the automotive industry needed.
And I suspect a bearing failure would have been completely catastrophic.
You got that right.
All right, so enough about this. Let's bring in our special guest.
Charlie Chesbrough from Cox Automotive. How you doing?
I'm doing well, John. How are you?
Charlie, you look like the perfect COVID rat with your beard, and looks like you've been hanging out in that room since the pandemic broke.
And I'm sitting in my basement of my house, in my basement office. Haven't emerged in 6 months. It feels like most of America these days.
Absolutely.
When you do emerge, let us know if you see your shadow or not.
Yes.
So I want to, before we start talking to you, Charlie, about what you do, I think for people who don't know what Cox Automotive is, it's Auto Trader, Kelley Blue Book, Manheim, Dealer.com, and a whole bunch more.
Yeah, lots of companies.
Yeah.
We I like to call us probably the biggest name in automotive that folks just haven't heard of, and we're involved in almost every aspect of the automotive business. Once the manufacturers make the vehicle, once it's made, then Cox Automotive gets involved with everything from logistics of getting it from the factory to the dealer, to helping dealers sell these vehicles, promote these vehicles, maintenance for these vehicles, finance these vehicles. We're involved in every step of the way.
So your divisions are famous, but the overall isn't as famous. Which sort of, John, reminds me of when we were talking a few weeks back about the difference between Ford and General Motors, that people, they buy a Ford car and they feel good about their Ford, but nobody buys a General Motors because they buy a Buick or they buy a Chevy. So that's sort of like where Cox is, but I digress.
And one other thing too, Charlie, about Cox that I find fascinating, you guys are part owners in Rivian, and you got a seat on the board.
We do. Yeah, we're definitely getting into the electric game. We see there's real opportunity in being in the fleet management business, that we see there's going to be a lot of fleet activity with electric vehicles. We have a lot of great properties around the country where we do a lot of auctions, as well as a huge dealer management system that we have out there that are using a lot of our products. So we think that we're well set up to cater to the fleet business if and when that gets going here for the electric vehicles.
So Charlie, before we start talking about the numbers that you guys have just released yesterday, I want to go back to January 29th when you guys put out a statement, and I thought in some ways, in some ways, I think that this is prologue to what we're seeing, and I want you to comment about it. So I'm going to read this so I don't get it wrong. So you guys wrote, the overall vehicle sales pace is expected to trend lower in 2020, even though economic and consumer conditions remain strong. Affordability is a major concern in the vehicle market as MSRPs and monthly payments continue to increase. Retail sales have been in decline in recent years, and this trend is likely to continue in 2020. So you guys, before
we got the direction right. We got the direction
before all this happened, you saw this was happening. So okay. So what has happened since, in your estimation?
Oh boy, this is only an hour show, right? Well, a lot's happened. I mean, it's really just been a crazy time for automotive. I'm sure everybody's well aware, but as a data analyst and someone who's looking at numbers, it's really just been so volatile. It's really been hard to kind of gauge what are the new trends, what's just noise, what's really emerging from all of this. And there's a couple interesting things I think that really pop out. One, if you look at how sales changed during the pandemic, and really you can kind of look at sort of March 1st to April 30th as sort of like the key period where it was all hitting the fan. you can see massive differences in sales around the country for states that shut down, where the governor shut down activity, there was no vehicles to be sold, and other states where they just said, don't worry about the virus, we're going to keep going, or it's not that big a problem here for us to shut down. And you can see that had huge implications for how vehicle sales are performed this year. And I think we have to as we look at, winners and losers for the year and what brands did well, what products did well, those governors shutting down really had a massive impact on sales that was completely out of the control of the industry and anything anybody was doing and the quality of products or marketing plans. And so that's been going on in the background as those shutdowns happened. It really disrupted things. And we saw huge movements in vehicle sales and shares of the market that different states had. We saw like New York and Pennsylvania, huge declines in vehicle sales. Then all of a sudden, huge increases in vehicle sales. While in the south east part of the country and in Texas, we saw vehicle sales hold up really well. And then all of a sudden, they just aren't in the recovery phase. They just haven't been quite as strong. So just a lot of moving parts happening behind the scenes. And it's been difficult to really try to interpret what does all this mean in terms of where the industry is going. But I do think a couple of things are emerging. One is that the retail customer, folks like you and I going out and buying vehicles, we held in there pretty well. I think most folks that were looking at this industry 6 months ago were just biting our fingernails as to, boy, how bad is it going to be this year? And I think we're all pleasantly surprised at how robust new vehicle sales have come back, and not just the volume of them, but the quality of them. I mean, it's a good mix. The manufacturers are making good money. The vehicle prices are strong. Incentives are low or relatively low. So it's just been a really surprising situation for the industry and a pleasant one, considering what I think we all thought it was going to be just a few months ago.
Okay, Charlie, but here's the thing. Congress put $2.2 trillion into the economy. The Fed stepped up. I think if you look at all the money, it's $3 trillion in total. You bet the economy did pretty well for those who are still employed. My question to you is, does this hold up? We're into a second wave. Europe is probably a preview of what's going to happen here. What's your outlook now? We just saw great results for the third quarter. What do you think the fourth quarter and into next year look like?
Well, you're right, John. I mean, there's tremendous headwinds out there, and probably the biggest one being that the stimulus all happened a long time ago at this point, 6-7 months ago at this point. And it's a little long in the tooth, and it's not having the same impact on the marketplace as it had before. That's one of the things we're very concerned about, that is going to maybe even look at a very weak economic growth here in the fourth quarter, possibly into the first quarter, that we could see this economy make a bit of a dip, as well as fears about COVID and outbreaks and all of that could chase buyers away from the market. But that said, we had a lot of headwinds that should have held down this market already, and they haven't. We've had inventory issues where supply was pretty tight out there and continues to be pretty tight. But folks still found a way to find the vehicle that they want, and we're still buying. And I think in the early days of the pandemic, I think we did discover the cure for COVID, and that's 0 for 72 and 0 for 84. When that was going on in late March, early April, risking your life to go out and buy a vehicle made sense because that was a pretty good deal. I couldn't turn that down. And I think if we learn one thing, it's that vehicle buyers, nothing's going to keep them from a good offer out there if you've got a good monthly payment. And, I think the industry did find, and maybe I think this is one of the things we'll see emerge from this, that 84-month financing may be sort of the new golden egg here for the industry. As crazy as it sounds, it does keep that monthly payment low when these things are getting so expensive. And it seems to have moved the needle, at least in the early days of this pandemic.
Charlie, but isn't some of that perhaps analogous to people buying all that toilet paper, that they wanted to get it because they wanted to get it just in case, and so they went out and bought all these vehicles just in case?
I'm sure there's some of that. Yeah, I think that's some of that. I think probably the bigger issue is what we're kind of uncovering here is you've probably heard some of the economists out there talking about this K recovery, that part of the country or part of the economy is doing well, and those heavily invested in the stock market and higher incomes, they're sort of recovering quite nicely. Those at the other end are not doing as well, the hourly workers, and so they're still in a recessionary environment. Things are getting worse for them. It seems to me that what we're seeing from the new vehicle market is that we're the upper K customers, the natural buyers of vehicles out there didn't get hit quite as hard from the economic collapse that we had as hourly workers, which are not new car buyers. And so I think our natural constituency has held up quite well, at least so far. And that's why vehicle sales have been doing as well as they have. Certainly some folks may be buying out of fear. Some folks may be buying because it's just too good an opportunity. And of course, people just had to buy, right? There's always off lease that's generating volume each month. There's people who need to replace their vehicle. That's always going on. But I think the environment that we're looking at going forward is one where we're assuming that some kind of a second stimulus is going to happen, but probably not until we get to the new Congress, whatever that makeup is. And clearly there's a lot of different ways that could play out, but it seems more than likely that regardless of who wins next week and who takes over Congress, that some sort of additional stimulus will be coming down. How large, how targeted, that certainly remains a question mark. But sometime in January, well, probably February, we're going to see more money poured into this economy.
Charlie, and in terms of consumer spending habits, like everyone went through some form of lockdown where they're going out less and spending less money. Has that factored into the car sales in any of your data where, people spend less going out to restaurants, so that's freed up money for either another purchase or pulling a purchase ahead?
I don't have any firm data that says that's actually occurring out there. Generally, I would say if you're on a tight enough budget that going out to eat or not is in question, the option to buy a $40,000 vehicle is probably not weighing in the balance from that. But certainly there are consumers out there that are living on the edge and that they're making a decision of, do I buy that vehicle or don't I? I think one of the things that we've seen initially in the early days of the recovery period of this pandemic is that used vehicle cars just were flying off the shelves and even had a very fast recovery, more quickly than new vehicle sales recovered. And I think what we're seeing is that lower price point, as well as the stimulus that we had that was targeted, had a number of bills or parts of it that were targeted towards more lower income folks, really stimulated used vehicle demand. And probably also pulled in some folks from the new vehicle market that bought in the used market just because there's more to choose from at a lower price point. The new vehicle market just doesn't have a lot of products anymore offered at below $20,000 or $25,000. If you're looking for variety, if you're looking for a leather-bound crossover, you're going to have to go into the used market, but there's a whole lot to choose from there. And I think we saw a lot of folks starting to do that. And again, I think that's one of the trends that we're going to see emerging from this is that new vehicle prices are going to continue to rise and are going to be catered more and more to upper income folks. And the industry is going to be leaving those price points in the rearview mirror, and they're going to be heading to higher and higher price points, leaving folks that want to spend less than $30,000 to go to the used market. That's where their opportunities are going to be.
So Charlie, to go back to what you were saying in January, though, that two questions. What did you think the market would be this year were it not for COVID? That's number one. And then number two, one of the issues that you guys identified was the fact of affordability right across the board. And I mean, if, as you say, the prices are going to continue to go up, are people going to buy only if they are able to have, 5-7 year car notes?
Well, for the industry, it's crazy. It seems crazy to tie somebody into a loan for 6-7 years. I mean, it just, you're taking them out of the market for future purchases. They're going to be out of the money on that vehicle for so long. But the reality is if you want to impact that monthly payment, and we know consumers are out there shopping on monthly payment, they're not really shopping on the MSRP, the sticker price. And if you want to change that monthly payment, extending loan terms is the easiest way for the industry to do it. You take a 6-year loan, you make it a 7-year loan, you can knock $100 off that monthly payment. And for most folks, they're just thinking that monthly payment. They're not actually thinking about how long they're going to be paying this for. And also the fact that the Fed has gone to essentially 0% interest rates, it does make the long-term financing of these vehicles a little bit more affordable for the captive finance companies to do those offers. So, and that's one of the reasons I think that we've seen retail come back as strong as it has. It's still down year over year, but it's certainly doing much better than, say, leasing activity, retail leasing, and certainly commercial fleet or rental fleet. And that's because that the industry has these 0% financing offers, and a lot of folks have really been attracted to these things. And one of the things that we've seen in our own data at Cox Automotive is we get contract data of people who are buying vehicles around the country from our DMS system. We can see what were the terms of the contract, what was the interest rate they signed up for, how many months is the contract for, what was their down payment. We can look at all those numbers, and one of the interesting things that's emerging from this is that the down payment that people are doing really kind of fell during the worst of the crisis, but it's now back to normal, but it's still trending higher, and people are being forced to put more money on these vehicles. They're buying more expensive vehicles. And I think what we're seeing in the marketplace is that the lower income folks are essentially dropping out of the market. And so we're seeing a lot of these rising prices and falling interest rates in the data, not because that's what's moving the market. It's just that the folks who buy the less expensive vehicles have the higher interest rates that they're paying, and the lower FICO scores are no longer in the new vehicle market. They've left. So we're seeing that it's only the wealthy folks that are buying the most expensive vehicles that remain. And that's why we're seeing a lot of the prices starting to rise, even though we're in this recessionary environment. It seems a little counterintuitive.
Charlie, keep going with that, because we've got a question here from one of our viewers, Kevin F. And he wants to know about why the prices of new cars have gone haywire. He says he has not yet heard a good explanation. Is it supply? Is it demand? Is it the auctions? What can you tell him besides what you just mentioned of people of lesser means dropping out of the market?
Well, I think there's probably two answers to that. Over the short term or the near term, it's a low supply environment with relatively strong demand. So the industry doesn't have to go aggressive on incentives. They can sit back a little bit and not have to really put money on the hood on these vehicles. So those prices are a little bit higher. But over the longer term for the industry, as you know, John, it's all these technological components. They add tons and tons of cost to these vehicles. Everybody loves them. I mean, people want them for the most part. I think there is room in the market for a AM radio rolled up window vehicle. Maybe the Chinese will make it come in below a $10,000 price point. But it's all of these bells and whistles on these vehicles and all these technological components. They're really adding in a lot of inflation on these vehicles that I think that we're going to see vehicle prices continue to rise more rapidly than incomes. It's just a situation that we're in as an industry. They're going to get more and more expensive. And, I've been saying this internally to our own team that, 20 years from now, we may be looking at only two vehicle segments in the vehicle market, luxury and used, with the idea being that the very fact that you can afford to buy a vehicle and expensive as it is and insure it and everything else, it must be a luxury type purchase. And that, the whole concept of all these different price points may be going by the wayside as these things get even more expensive.
Hey, I got another question along those lines too. We've seen unbelievable third quarter financial results from automakers and suppliers. But as you know, we're seeing, and you just mentioned it, because inventory is tight, they don't have to discount. They're getting way more revenue. In fact, we've seen sales go down and revenue go up at several companies. Is this an inflection point for especially the U.S. industry? Maybe they shouldn't operate with so much inventory. Subaru's been famous for running on, 20 days supply or something like that, and getting max money for it, getting MSRP, because they don't have to offer discounts to move the metal. Do you think the industry is going to start to lower their inventory levels because of this?
Well, this has been something the industry has been talking about for a long time. We know that the Asians and the Europeans, the old concept of buying a vehicle, going in on a weekend and buying a vehicle and going home with it, that's an American concept. They don't do that in most of the rest of the world. I think the idea of being lean and mean is something the industry has been wanting to be in that position for a long time. Nobody likes these incentives necessarily. It's just to juice a vehicle, not something to be expected. So I think the fact that the industry is able to back off, I'm sure they like that position. Do I think we're going to give up the business model of dealers having a plethora of products to choose from and colors and trim levels? I don't know. We're kind of used to that in the vehicle market here, and I suspect that we're going to be sticking with that at least for the next few years. dealers keeping a lot of inventory on hand.
You're saying the incentives are low, but in a way, aren't the vehicle manufacturers that have finance arms actually losing money because of the 0% rate? So in effect, they're actually paying an incentive for people to buy.
Well, that's all included when you do your figuring out what they're spending, right? So there is subvention cost. If you're going to buy normally a 3% loan down to a 0% interest rate for 6-7 years, it's thousands of dollars of subvention costs that the captive is going to assume. And so you're absolutely right on that. But as a strategy in terms of impacting that monthly payment as to what consumers see, it is a very useful tool to have that 0% financing with, as I said, the long loan terms. That's the best payment that you can put out there. The thing we have to keep in mind as an industry, though, is that very few people actually qualify for what's promoted out there, that 0% offer. The vast, only a small portion of buyers out there are going to get that 0% offer, have the FICO score capable, and are in the market to buy a vehicle at that moment. So the industry promotes the 800 FICO score monthly payments, but really only a small portion of the public gets those. And in fact, in our own data, we can see, I can't remember the exact number, but I think it's about 15% of the market that we can see in purchasing is paying 10% interest rate or higher. And when you think about a $25,000, $30,000, $35,000 loan at those types of interest rates, the monthly payment just gets really, really crazy. But
hey,
a
we got
huge
to take
portion
a
of the
quick
public does that.
Quick commercial break. We're going to come back in a minute. We got a lot more to talk about, but first, a shout out to our good friends at Borg Warner.
The world is changing at an ever-increasing pace. No matter what the mode of transportation, there is always the need for an efficient propulsion system. And that's exactly what Borg Warner has been doing since the earliest days of the automotive industry. We create innovative mobility technologies that reduce energy consumption and emissions while improving performance. Our proven track record has made us an industry leader in forward-looking propulsion solutions for combustion, hybrid, and electric vehicles.
All right, we're back with Charlie Chesbrough from Cox Automotive and Mike Austin from Hemmings. And Mike, I got a question for you. I mean, you guys track the classic and collector automobile market. What are you guys seeing because of COVID? Or are you tracking that?
Yeah, well, the best example for that is auctions. Our auction platform is about a year old, and it was really surprising. I expected things were going to go south, and throughout, it's new, so some of here's the growth of a new platform, but throughout the lockdown in March and May, auction sales kept going up. And, there's a lot of different theories you can put behind it. Some of it's like, if you're not going on vacation, maybe you have more money for a car. A car is a pretty fancy vacation, but some of that money's going towards it. People are cooped up. They're going stir crazy. Maybe they're driving less. So they make the second car a classic instead of a daily driver. But yeah, we've seen it go up. The only trend we've seen lately, which I think goes back to the new car market, is volatility. That in the last few weeks, we've seen when cars don't hit reserve in the auction, they've missed by a greater margin, but the cars that go over reserve going over by more margin. So it's getting weirder on both ends, and that part's unexplained. But in terms of the classic market, it's strong. It's mostly strong in that $20,000 to $60,000 range. When you get up into $100,000, that's a long-term trend, but it's softer up there.
Interesting.
Didn't Barrett-Jackson, wasn't it lower this year than it has been in past years?
I'm not sure. I think they did about 24 million in sales. They set a record for a Ford GT, but I don't know if the overall number was higher or lower.
So Charlie, you guys are seeing that this year, forecasting that used car sales are actually going to be lower by 10%.
About 10%.
So why would used cars be lower if the affordability of new cars is so much higher?
Well, or getting out of price range for folks. Well, there's a lot of other things that are driving this, of course, right? The fact that you have 8% unemployment practically. We still have 22 million folks that lost their jobs. There's still 11 million folks that don't have jobs. The weaker new vehicle market means fewer trade-ins for the used vehicle market. So there's a number of factors that kind of chip away at the market, which finished at about 40 million last year. But even still, I again, given the calamity of what we were facing this year, just being a 10% down market, boy, I'll take it. That seems pretty good to me. And we're expecting the used market to actually do much better next year and actually get pretty close back to normal as we start to see more folks getting acclimated to this environment, more trade-in activity. But one of the interesting things about the used market is vehicle prices have really been taking off. They really hit a bottom during the depths of the crisis in late March. But since then, we've seen used vehicle prices really just explode, up almost $3,000 since then. And they're now sales are starting to moderate a little bit on the used market. And I think we're starting to see a little bit of economic supply and demand and pricing and all of that. The laws of economics kick in, and these vehicle prices are now getting to a point that they're a little bit too expensive for folks. So they're starting to pull back from the market. So I think barring any kind of additional stimulus from the government, it may be this huge rush of vehicle prices and activity we saw in the used market is now going to start to moderate as we get sort of further beyond that stimulus we had 6 months ago.
Charlie, we got another question from a viewer, Sean Kadar. He wants to know if leasing has had an impact on MSRP.
I think, often you think people, leasing allows people to get a more expensive vehicle, so that may jack up the MSRP. I don't think that's the case this year. Leasing is actually down a little bit more than retail purchasing activity. I think what's going on this year, as I said before, is that the 0% offers with the long loan terms made a lot of the more expensive big SUVs and pickup trucks that much more affordable. So a lot of folks went out there and bought those things. And as well as I mentioned before, the fact that who's left to buy in the new vehicle market are six-figure incomes and above, and that the lower incomes have dropped out. And they're the ones that sort of lowered that MSRP average. And so I think that's also part of the reason that we're seeing that price inflation, is that the wealthier folks are buying the more expensive vehicles.
What are the consequences? I mean, what's going on in fleet?
Fleet's been a very interesting story the last couple of years. In December of 2017, we passed tax reform, which made huge changes in depreciation allowances on business use vehicles. And what that meant is that for some companies, you could buy a commercial vehicle or a fleet vehicle, and you could depreciate up to 100% of its value within its first year. And so if you're a business, you could write off huge costs of this vehicle. And we think that was a contributing factor, that we saw fleet share of the market in 2018 and 19 really go up significantly. A lot more fleet activity was happening. But what's happening this year is that because the rental car companies have been decimated because of business travel and leisure travel, we've seen a massive pullback in fleet activity in rental as well as in commercial fleet. Rental being the most. I think at this point, we're down about 45% year to date on that rental fleet activity. And our expectation is this fleet's going to be weak throughout the rest of this year. And probably until we start to get control of this virus, get that the vaccine out there, it seems unlikely that business travel and leisure travel is going to be coming back anywhere near the levels we had before that would see that fleet activity get back to normal. And as well as the idea that if Biden comes in and changes things, one of the things he's talked about is changing the tax reform from 2017. It may be that a lot of those depreciation allowances that were allowed in the tax law before may be changed. And so that might hit fleet activity as well. But what's really been driving the market this year, as I said before, has been the retail purchasing activity. That's really what's been saving this market and is likely to continue to save it, at least through the rest of this year.
And then quickly, how big is fleet in terms of overall sales?
It's a little over 3 million, about 3.3 million of the a normal year of a 17 million type market. So it's around I guess it's 18%, somewhere in there of the market. And and this is kind of interesting that in the environment that we're in now, actually having weak fleet might have been a big plus for the industry, because when we had these factories shut down in April and May, Normally, we'd have hundreds of thousands of fleet deliveries that would have been expected at that time. Having the factory shut down as well as the fleet activity kind of disappear allowed the factories, when they reopened, to focus entirely on filling that retail pipeline and not having to fulfill any kind of fleet activity. And so it allowed the industry to really focus on getting the vehicles to the consumers. And I think that was definitely a big plus for them.
Good stuff.
One
Hey,
of the
Gary,
things
I know you have a list of other things that you think we ought to get into. What's been going on in the industry this week?
Well, I want to talk about some broader issues, and so Mike, I know you're a big Uber enthusiast, and
no.
So we haven't talked on the show, and so the election will be next week, but there's that interesting Prop 22 in California where basically the Uber and Lyft and DoorDash and a number of these gig economy companies want to push back on the California law, which is going to cause them to define the drivers as employees. And, they're saying, we can't possibly do this because this means that we have to pay employee benefits and we have to do all of the things that, if somebody's an employee of our company. So I'm wondering, what are the consequences of Prop 22 not passing and Uber and Lyft, et cetera, having to make these people employees? Is the bubble going to burst on ride hailing? What do you guys think? We'll start with you, Mike.
I'm going to say no. I mean, ride hailing, I assume, is taking a hit just from travel declining, but the other gig stuff like DoorDash probably saw an uptick. So, and I would say that's a permanent thing. People are now used to getting delivery, just like, they're getting used to, there's probably more curbside pickup for all sorts of things. So my guess is California's a huge chunk of it. It's not the whole nation. And, they'll find a way. It's just, they're going to charge the consumer more. They're going to take a little less of a margin, but it's not going away because it's, one thing is I'm not a huge fan of Uber and all these things, but it did fill an important niche, places where they didn't have taxi service or where the taxi service didn't account for rush times, like weekends. And, that's still there and it still needs to be solved.
Yeah, I would agree with that with Mike there. It seems like Uber and Lyft are too far along now that they would just disintegrate if they didn't get their way on this one. And I think it probably would mean a little bit higher prices for folks. The convenience factor, people are willing to pay for that. And there's certainly a lot of convenience factor involved when you're dealing with Uber and Lyft. I will say, I think the New York taxi cab drivers are probably watching this closely because we all know they've been complaining for years, as all cab drivers have, that it's been unfair competition for them, that these Uber Lyft drivers don't have the same cost structures, that they don't have to carry the $1 million plus insurance on their vehicles the way a cab driver has to. So if anything, it would create more competition for the old taxi drivers if their cost structure had to change.
Yeah, what do you think, John?
I think this is going to drive up costs for Uber and Lyft, and that's going to bring their cost closer to taxis. And so they may lose some business this way. But I also believe this is going to get them down on their knees every night praying that autonomous vehicles are here tomorrow.
So Charlie, do Lyft and Uber have a measurable effect on car sales?
Yeah, we've tried to look at that. It's really hard to pick out what their impact would be. Clearly they're focused more on urban markets. You would think it would be folks that would be replacing buying a vehicle that they can meet all their needs from an Uber and a Lyft. It's just they're not big enough yet. They haven't been around long enough yet. It's just been a rising market for the last 10 years anyway. So it's hard to really isolate what their individual impact may be. But my guess would be it's not much in terms of replacing people from actually purchasing vehicles. And I think the pandemic itself has made a lot of folks rethink about what their personal vehicle ownership is. Maybe I can get around Monday through Friday using Uber, Lyft, even public transportation. But I think we've seen through this pandemic that folks still like having their own vehicle. And maybe with that virus out there, public transportation and Uber and Lyft become a little bit less desirable.
Have you seen the, some are saying that people, because they feel uncomfortable being in public transportation or in shared rides, are buying vehicles. Do you see any of that, or is that just, an urban myth?
Yeah, again, the only way to really identify that would be some sort of a big survey research of identified a bunch of people who bought vehicles and what their activities are. We haven't done that analysis yet, but I wouldn't be surprised if we don't see someone starting to do a lot of COVID-related research, and that being one of them.
Charlie, we've got another question here from a viewer, 47 Solar. He wonders, with all these EV models being announced, look at all the publicity GMC just got for the Hummer as an example. He wonders, is that having an impact on ICE sales in any way?
Again, it's hard to say that electric vehicles are crowding out any sort of old vehicle engine buying just yet. I think it's still a pretty niche product. The people who are interested in electric vehicles are a very specific type of vehicle buyer. They're probably not driving a lot of long distances. They're more just doing short little commutes in and out of town, maybe. So, it's hard to really identify to say that electric vehicles are going to be chasing out gas vehicles just yet. But certainly, what President or Vice President Biden has talked about, if he's elected next week, 500,000 charging stations around the country could make a dramatic impact on electric vehicle adoption in this country. There's a lot of people who say, no, let the market forces, dictate whether we need electric vehicles or not. But electrics, you need a place to charge these things. And you almost need to build the infrastructure network first before you can actually sell these vehicles. And so this could be a huge step into getting electric vehicles to take off. I will say the thing we have to keep in mind as this country decides to go to electric vehicles and get away from gas engines, that by 2030, the price of gasoline's probably going to be $1 a gallon. If Europe is getting away from gasoline and China's getting away from gasoline, well, we're still producing a whole bunch of gasoline out there. It seems like the price is likely to come down, and it may be, an 8-cylinder, V8, V10 engine may be a hot seller by 2030 if we're looking at really, really cheap gas prices. So that's something that may linger in the background as we look at as this country starts moving to electrification.
Hey, I got a Tesla question for you. Tesla just unlocked the beta version of its full self-driving FSD. They've only let a very small cadre of owners experiment with it and give them feedback. But as you know, what Elon's talked about, I think, you can put your Tesla in the Tesla fleet and earn money on it. I think he has said you can earn as much as $30,000 a year on it. And as you know, too, they just raised the price of FSD. It was, I think when it first was available, they were talking $6,000. Then it went to $7,000, then $8,000. Now they just bumped it up to $10,000. As an economist, what do you think? Is this truly transformative? Because as you know, too, this is driving Tesla's unbelievable valuation, stock valuation, that possibly you can unlock all this value through FSD. Do you go for it? What are your thoughts on it?
Well, this is one of the things that the industry has been waiting for a long time. As you said, when will this capability be available? And it's sort of the app killer, right? Once Tesla gets this ability that it's a self-driving vehicle, it can do its own thing. It truly is a robot vehicle. Why buy anything else? How much is any other vehicle worth if this vehicle can do this? I mean, wouldn't everybody want this capability? And I think that's sort of what Wall Street has been banking on. That once Elon's able to master this, everybody's just left in the dust because they're going to be years and years behind from being able to catch up to this. I don't know. To me, it's until we can. To me, the real test is when can I go from the front seat to the back seat. If I can go into the back seat and sit, letting my hands go on the steering wheel, I do that now, right? So I don't know that that's nothing fancy. It's really, can I get in the back seat and feel comfortable this thing's going to drive itself? I'm old school. I got to see this thing. I got to ride this thing. I just don't believe consumers are going to really feel comfortable with that. I don't know that the legislatures are going to allow these things to just drive everywhere willy-nilly without, massive regulation or, certain earmark spots that they can be done and they can't be done. I think it's a long way till we're going to see these robot vehicles just drive anywhere that they want to, unregulated, untested. I think we're still a long way from that.
And let's clarify too. They call it full self-driving. The early demos have shown it's not full self-driving, and it has limitations being camera-based because you have weather. The camera's getting cloudy. Consumer Reports just said that Super Cruise is a better system at this point. And every time I'm on here, we talk about Tesla, and I say never bet against Tesla, but it's not there yet.
Well, and let's not get ahead of ourselves here, because it's still in beta. Okay, so it's a select number of people who are getting this. It isn't like anybody who has a Model 3 or a Model S can say, oh, I can get this. So they're metering it out now. Elon did say he believes it'll be in wide release by the end of 2020, but if you read some of the reports that are coming in of people who actually have this, ain't working out so well for them. So I think, as Charlie, as you say, that there is a ways to go on this.
Mike, with all this interest in electric vehicles, has that impacted the collector classic? I mean, has there been a revival in classic electric cars? And I know there aren't a lot of them unless you go back over 100 years.
I don't think there has been, because there's not that many. And there are, real early, like, 1910s steam era electric cars. I think of people look back and see the link that, hey, they've been there all along. But no, you haven't really seen that, because there really aren't any until you get into maybe the first generation Prius, which is now, I think, 25 years old, maybe older than that. But one thing we did see this week is Chevy put out Blazer with what's going to be a crate engine electric conversion. And it uses mostly stock Bolt EV components. You'll be able to put the motors together in series if you want more power. And I think that's going to be a piece of the overall classic world going forward. It's not going to take anything over. There's still a cost issue, but you look at buying an old Blazer, it's big, it's heavy, it's got this 175 horsepower, smog era V8 in the one that they built. You put an EV in it, it doesn't leak oil, doesn't need any maintenance. It's the perfect thing for driving around. You could, conceivably turn it into a daily. So I think that's going to be, it's not like we're going to stop seeing V8s anytime soon, but more and more, you're going to see electric conversion as part of the classic life and part of that classic world where people buy an old car and instead of putting a new engine in it, they put a motor in it.
Yeah. Did they say anything about the cost?
No, they didn't. Part of it is they're going to show it at SEMA, and then they're going to survey people and say, what components do you want with this? What prices are you comfortable with paying? But if you break it down, the Bolt battery pack is around 10 to 12 grand. Controllers are in the $1,000 range. Motors are probably another $1,000 or $2,000. So you're looking at somewhere, I would guess, $15,000 to $20,000, which sounds like a lot of money. But if you look at the E-Rod, which is GM Performance, they'll sell you a whole engine and transmission and all the wiring ready to go. Those run around $20,000 too. So
I know we reported on something in Autoline Daily. Somebody's doing a sort of e-crate conversion using Tesla stuff. And if I remember right, it was like 30 grand for that.
Yeah. And that's the big Tesla motor though. I mean, that's a lot more power. The GM one, if you just get a single motor, it's 200 horsepower. So I would expect if you wanted, 400, 600 horsepower, you're spending that much.
Gotcha.
As well.
And then we got a comment from Jonathan Brown saying he thinks that the e-crate EV option is going to be terrific.
Yeah, I mean, it's, again, you think about it, like a lot of these classic cars, I love them. But the reality is a new car is much more comfortable. Like, Blazers and Broncos are cool, and they're probably some of the more comfortable classics in terms of space and cushiness. But, when it gets down to it, the experience of driving an EV that, especially if you're just doing errands around town, there's no shifting, they jump off the line. And how far are you driving that classic car anyway? Like I said, it's for a lot of people, it's going to be, this is what I want. I don't want to wrench on this every weekend. I want it to look cool and not worry about it.
Well, one of the concerns, if I can just interject, one of the things I see about the EV market that I have some concerns about in terms of getting these things rolled out in the U.S. is the financing side of these things. And the technology is moving so quickly on these EVs, and yet we know people, when they buy a vehicle, they're going to own it 6, 7, 10 years. If I said we're going to buy your phone and you're going to have to stick with that same cell phone for the next decade, you're going to be like, holy cow, this stuff changes. How does it stay up to date? If you're buying an electric vehicle today, knowing that there's scores of these models coming over the next couple of years, lots to choose from, how do you predict residual values when the range of my model is 150 miles, the range of next year's model is 200, the one 3 years from now is 500? Residual values are going to be very difficult for the industry to really peg down on these electric vehicles because the technology is moving so quickly. As I said, once these killer apps come out, what's the value of a used vehicle that's not autonomous or has 150-mile range when all of a sudden everyone else has 500-mile range? And I think the industry is asking consumers to absorb all of the risks with this changing technology and what their vehicle value is. And I just think it's going to be a real challenge for consumers to say, hey, I'm going to buy this electric vehicle knowing that the technology is changing dramatically, year after year after year. And that the industry may have to get creative, that we may have to think about subscription type services or something where I don't have a vested exposure to depreciation of this vehicle, because it could be quite a quick depreciation on some of these new technologies.
Yeah, but that's why I tell people don't buy an electric car, go out and lease one. Let the leasing company worry about the residuals, although they'll bake that into your payment early up. But here's the question, Charlie, what about over-the-air updates? Because as you know, Teslas hold their value better than the industry average for that very reason.
Absolutely. Tesla's cornered the market on being able to maintain updates and keep these things going with the latest and greatest. I don't know that all the electric vehicles are going to have that capability. Can everybody upgrade another 100 miles of range with just a software upgrade, or does it require a whole new battery? And we haven't even come to standardization on the batteries themselves. How do I get a replacement battery 5 years from now from some company that's launching their first electric vehicle and has no history in these segments? I just think it's a lot for consumers to have to take on in terms of risk when they are spending a lot of money. They're going to own this thing for a long time. I think the industry may have to get creative to get consumers to take on the risk, and maybe leasing is the way to do it. But that's only going to affect a very small portion of the market. Lots of folks don't consider leasing because it doesn't meet their needs.
Hey guys, we got to take a quick commercial break. Yet once again, this is going to be very brief. A quick shout out to our good friends at Bridgestone. All right, we're back. Gary, what else was on your list?
Well, before we leave this, Charlie, I want to go back to what you were just saying about the price of electric vehicles and the risk that consumers are going to take. Earlier on in the program, you said that there's going to be luxury cars and used cars. So if these are luxury buyers, does it matter to them?
Well, I'm saying we're going to be there maybe in 20, 25 years, long down the road. But certainly, luxury buyers don't want to throw their money away either. So, everybody, when they're buying this vehicle, they want to know that they buy with confidence that they've got a vehicle that's sound, is going to be supported, isn't going to depreciate in value outside of anything that's normal. And like I said, I just think with these electric vehicles, there's so much unknown about how they depreciate. I can tell you that in the auction market, it's the valuations are always a little skewed because of the government discounting that folks get on these electric vehicles. The $7,500 credit always kind of messes up residual values right out of the gate. And historically, Tesla's aside, electric vehicles hadn't held their residual values very well. And so my concern is just with the technology moving so quickly, and particularly with the range, right? I think that's, if electric vehicles went 500 miles, no worry. I think everyone's in, fine. I don't need to go to the gas station. There's nothing that I need to do that for, but we're not there yet. And so if the vehicles are going to, double their range every couple years, that makes those old vehicles that much less valuable. And I think it's going to make folks apprehensive about making a big purchase. These $30,000, $40,000, $50,000 is a lot of money.
So you haven't seen, when you look at, more EVs are coming online with more range, like 200 plus, you haven't seen that breakover point where, clearly if we all had 500 miles, everyone would kind of just stand pat there and it would advance in other ways, but range wouldn't be the issue. So you haven't seen the breakover point with range yet. Is that safe to say? In terms of residual values where someone says, okay, this thing goes 200 miles. That's a stable price. People are going to be happy with that instead of waiting for the next thing to come down.
Well, I don't think we know those points yet. It's all so new. I don't think we can say that this, this is what the minimum people will accept, or, it's still moving very quickly. But The Rivian's talking now about what, a 300-mile plus range for their trucks. That might be the deal breaker if you can get a pickup truck that's going to go 300 plus miles. My point is simply that the technology is moving so quickly that your cell phone from 4 years ago has nowhere near the capabilities as your cell phone today probably has. And certainly, I think that's going to be true with these electric vehicles. And again, as these banks are trying to estimate what's this vehicle going to be worth 3 years from now, it's fairly easy to do. I want to say easy, but it's not that challenging to do for your ICE engines. They've been around forever. We kind of know how these markets behave. Electric vehicles is a whole new territory. We just don't know a lot about them.
Charlie, do you follow what's going on in Europe? Because EV sales are going way better there than anybody thought. I want to say they're up to 8% market share. They're outselling the EVs in China. How do you explain what's going on there?
Well, certainly there's been a lot of government support of EV activity over there and mandates, right? I mean, the local governments are telling people buy an EV because you're not driving your vehicle in this town anymore. So, I don't think Americans want that sort of mandate coming from government, but it may take that to make the EV transition actually happen here. But clearly the higher price of gasoline over there changes everything in terms of the economics of this. I mean, when you're paying, $6-7 a gallon of gasoline versus what we're paying here, $2.5. It's a much easier argument to make that there is value in going to an EV type transportation mode, but we don't have those same numbers here.
So the other big thing is Daimler announced that they're going to begin to collaborate, but collaborate not on personal vehicles, but collaborate on commercial vehicles. Charlie, are you seeing changes in the whole commercial market, going to alternative forms of powertrain rather than diesels, going to, the Nikola talking hydrogen or electric, or Tesla talking electric, and so on. So number one, a change there in terms of powertrain, and number two, in terms of these vehicles being more autonomous than past cars.
Well, I think autonomous within fleet seems to be like a natural pairing. Like, it seems like a good way to kind of start this technology, figure out how it works, have certain areas of the country or certain roads that are going to be autonomous roads, if you will, so that everybody kind of knows that, when you see a truck driving down the highway with nobody in it, not to worry too much. I think it's going to have to be a very careful rollout, or the police are going to be getting a lot of phone calls. But I think in terms of the technology that folks are going to use with these electric vehicles, I think that's still out there. I mean, I think there's still a lot of different companies that are trying a lot of different things. I don't think that we've come to an agreement yet as to what's actually going to power these battery electric vehicles just yet. I mean, certainly the Japanese were hoping this summer to really promote hydrogen fuel hydrogen technologies and the hydrogen batteries that they've got. So when they do the Olympics next summer, I think that's going to be something they're really going to promote. So there's still some other technologies out there, but I think in general, we at Cox feel quite confident that the electric market is really going to kind of take hold within the fleet delivery market first, before it becomes more of a product that the masses would start to buy. That the fleet might be the best way to kind of roll these things and introduce them in mass to the U.S. market.
Like all those Amazon trucks that Rivian will be building.
Amazon trucks, and certainly, Uber and Lyft, their drivers on electric vehicles would probably find things a little bit more profitable
right.
than their gas vehicles.
Right. And General Motors announced this summer that they were making if you're a Uber driver, you can get employee pricing on a Bolt. So
yeah, the one thing that folks about these I know that Daimler's talking about doing these autonomous trucks. And the one thing we got to keep in mind as a country is how disruptive autonomous trucking is going to be to this country, and that one of the highest paying jobs in America that you can get that doesn't require a high school degree is truck driver. And in America, we have thousands of towns around this country that the gas station, the truck stop, the Wendy's is the local town. That's the business off the interstate. And if the whole trucking industry can just drive right by these thousands of little towns and eliminate these high, good paying jobs for a huge segment of the population, it's really going to be an earth-changing event here for the country and really decimate rural America.
Isn't that what the interstate highway system did when it came to be?
Well, we've all got kind of acclimated to the idea of these little roadside stops, and I think they're going to be gone next.
It's just one of the waves of disruption coming. I mean, think of all the ICE jobs that are going to go away in the next 2 decades, and the communities that depend on the plants that make those components and engines.
Yeah. Lots of change.
So look, we've just about used up all our time here, but so just to recap, Charlie, things have gone better this year for the automotive industry than anyone expected, but there's still some uncertainty as to a second wave, the devastation for the travel industry, a lot of people losing their jobs. So we'll put you on the spot here. Looks like the SAR this year is going to end up at where, and where do you think the SAR is going to end up next year?
Well, our expectation is we're going to finish this year around 14.3, 14.4 million, somewhere in there. And then next year, we're expecting the recovery to continue. We're not expecting the market to go down next year. The risks are high. We are really concerned about certainly the election coming up next week. That can add all kinds of outcomes as a result of that. But we're really just most concerned about the economy itself and COVID and whether we do have this second wave. But assuming that we do get the stimulus, our assumption is the market's going to rise to about 15.2 million next year. So about 900,000 higher than this year. A nice gain, but we're not expecting any kind of V-shaped recovery getting back to a 17 million market. Certainly it's going to take us a couple years before we're going to get back to that level. But I will say, I think we're headed in the right direction. There's little reason to think there's any kind of collapse going to happen in the vehicle market. There's a lot of headwinds out there, but I think in general, as I was saying before, the natural customer of new vehicles has held up pretty well. And the expectation is they should continue to hold up fairly well.
So this year will be down 16% compared to last year, approximately.
Yes, correct.
So
and, we'll be up about 6% the following year.
When do you see us back to 17?
Probably around 2024, 2025, somewhere in that time frame. We think it's going to take a number of years to get back to a full market like we had before.
Wow.
But I will say, that said, that if the Democrats come in, we have this blue wave, you can expect that the stimulus bill that they're going to come up with in February is going to be full of all kinds of little stimulants for the vehicle market. Our expectation is not only these 500,000 charging stations, but lots of little goodies to try and get folks to buy electric vehicles, maybe some kind of a scrappage program to get rid of other vehicles. The Democrats love these types of programs, and I would have to expect that they're not just going to throw money into the economy. They're going to try to steer it certain directions, and I have to believe the automotive industry is going to be one of the industries they're going to try to manipulate.
Real good. Charlie, thanks for the brain dump that we just got out of you. This is excellent. I feel smarter already. And Mike Austin, thank you for coming on the show too. We're of course going to have you back on at a future date.
Thank you.
And Gary, next week, we'll be back here again doing it all over again.
Yes, we will.
And go green on Saturday. Don't forget.
Oh, yeah.
There's somebody who went to Michigan State.
That's right. Big game.
Good luck. You guys need it.
So for those of you not in Michigan, it's Michigan State versus University of Michigan on Saturday. So
that's right. And you got to watch to the end, as we learned just 5 years ago. Anything can happen.
That's right. Okay, you guys, take care. We'll see you.
Okay, thanks for joining us.
Bye-bye.
Bye.
Autoline After Hours is brought to you by Bridgestone Tires, your journey, our passion. And by Borg Warner, propulsion solutions that support a clean, energy-efficient world.
Visit our website, Autoline.tv, where you can watch us live Thursday afternoons. Get your daily fix with Autoline Daily and in-depth analysis and interviews with Autoline This Week. There's all that and much more at Autoline.tv.